The following is a presentation of TFNN. The Global Market Pulse. With your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome back to the show. Hope everybody had a good Thanksgiving. And it's Monday morning in the U.S., and it's Monday night here in Asia. I was in Manila all day today. Just got back. Seeing some people up at the Philippine Stock Exchange today, and it's hot here, folks. I know it's getting cool there, but it's still humid and still hot in the Philippines here. Big story, not that this is a mystery, but the ruble. We talked about this 50 target. Well, it just kind of blew past there. As you can see, we kind of eclipsed previous highs and then have not looked back whatsoever. And we talked about this most recent profile here around the 46-40 area on fair highs and 44-45 area down below 45 rounded off. And we always talk about, if profiles are below the latest price action, that's usually pretty bullish. And as we had, created this profile by the algorithm that automatically outputs it, and when price action was above, we were like, oh my God, you can't be short this anyway, no matter what. Hadn't had a lot of reasons to, but that was a pretty bullish sign in general. And this is a historic. I don't want to call it once in 100-year type move, but you've got so many things that are lining up in your favor for this type of trade, fundamentally speaking. And then you've got the technicals that kind of confirm it. That's what I always look for, is technical confirmation. You get a lot of good ideas. Eric Courtney comes on, which he's going to come on today. He's got a lot of good thoughts fundamentally, but then you always kind of got to do the confirm on the technicals. And this ruble is just, astounding the way it's moving up, or the way it's getting devalued. But that is also, as you guys have probably been reading the news, it will say, we had been talking fundamentally about, when will be the day or the week when the MO is, well, let's just, on the crude oil situation, let's see if we can amass cash by just selling the heck out of crude oil on the open market. And we talked about that not really happening yet, and now you're seeing the OPECs of the world, coming out with, we're not going to decrease production, and the Russians are basically saying, oh, you know what, we're going to flood the market with oil, blah, blah, blah. And now it's a race to see who can just sell 100 barrels of oil for $60 instead of 70 barrels of oil for $80. And if you do the math, that selling 100 barrels of oil for that $60 actually eclipses whatever I said before. So that's the situation with crude oil, and that's also affecting this ruble. Is why I brought it up. So, we had been talking. It hasn't been a real big mystery to really kind of put a stake in the ground verbally and say that crude oil is going to go lower. Those were just, in my opinion, fundamental logical thought processes. I'm not a mastermind when it comes to figuring those things out by any means, but you just kind of laid it all out and said, you know what? From a trading standpoint, you're going to have those squeeze plays. That's going to happen. And it was the setup for something like that. And I don't know if it's over yet. So we're going to take a look at crude oil, which was somewhat of the catalyst for this. And we've got a lot to talk about today. But, this crude oil started sliding on Thanksgiving Day when our markets were kind of, obviously not a lot of people were trading that day. But here's the 240, and there's the 27th right there. Okay. So the Thanksgiving was the 27th. So we started, obviously, this major slide, and now we're trading 65, 66. We've been as low as 64. And again, look at the profile here on the short term. We're well above the current price. So the selling point on the short term for crude oil, and again, things on our lows go lower. And we've talked about crude oil from the long-term stance. This is one of the reasons. This is our weekly. No reasons to go long here whatsoever. Here's the daily. And we talked about, we talked about 80 a lot on the December contract. We talked a lot about recently 74.54, and as we closed below, went back and retested. If you guys can see that, those are the powerful trades. This was the powerful trade. This was the powerful trade. Technically speaking, it doesn't get any not easier. Trading's not easy, but it doesn't get any preferential other than seeing things like that. And now you make your whole year when you're playing that game, and you get stopped out relatively tight, when you're wrong on that game, and that's kind of the way the math works out in your favor as a traders. Again, lose a little, make a lot. And this is one of those instances where keep turning and rinse the same way. That's exactly what's going to happen. Let me see what we got here. Okay, so that's the correlation, the crude oil ruble correlation. We also talked about the Australian dollar. You've got a lot of Chinese comments out there, slowdowns, blah, blah, blah. The Black Friday letdown. But let's take a look at the Australian dollar, because we were kind of hell-bent for leather on this thing going down. And here was the powerful trade as we had talked about it. But, we're also going to talk about what do you do now. So here's the close below, go back and retest, didn't work out. 11.10 that week. Excuse me, that was the previous week. We got back below, we closed below, we came back and retested, got very, very close to that line, if not to the tick on it. And with the fundamentals out there involving China and gold, which Australia is, I think, the third largest miner in the world. We're going to talk a little bit about that in a little bit. But when you have those setups happening like that, and the fundamentals kind of painting the story for you, I think you got to take shots. And just to kind of point this out, we took a shot before, didn't work out. Take a shot again, really works out. And that's just the way trading goes. So do we have Eric on yet, or are we going to kind of wait on the second segment for that?
Do you hear me? Am I on? Hello?
Yeah, you're sitting on the launching pad to come on. How you doing there? Hello?
I'm here. Can you hear me? Yes.
Yep.
Hello?
We're hearing you very well. Yeah.
I think they have to do a connection check on this.
Yeah.
You hear me very well?
Yeah, doing good. How are you doing today, Eric, up in New York?
Oh, that's great. How are you this morning?
I'm good.
Well, I've had a really interesting weekend in terms of, I just get up Saturday and look at the headline in the Wall Street Oil Company's nation's reel on this oil situation. I mean, this was kind of predictable. Traders have made a lot of money. This is a beautiful situation correlation-wise, oil, gold, and currencies, and you have covered a couple of really interesting points already, John. Are you there?
Right. Yeah.
I just have a little trouble hearing. Okay, I have a new relationship from my understanding of gold. Here in New York, there's been a lot of robberies of Indian homes. They go into a home and they hold the people hostage, and they take all their gold in Indian homes, because India, of course, has now become the number one consumer of gold in the world. Okay. So I use that with my pawnbrokers, So I've got to follow thieves and pawnbrokers, which are sort of synonymous. So I've got some new indicators for myself. But I'd like to continue this talk about the gold and oil and currency correlations.
Okay.
You've covered a couple of things like the Australian dollar, the Canadian dollar is another one. I mean, you have to have a pad with a plus and a minus. What countries benefit from this mess of the oil dropping so much? Strong dollar, weak demand, China calling, throwing in the towel a little bit on higher growth. And then the countries that Japan benefits, all of the people who import oil benefit. We benefit in this country, but you kind of have this complexity in your head. Gee, low price of oil. We're now pushing out 9 million barrels a day, and heading higher. We're going to surpass Saudi Arabia. So, so what countries benefit, what countries don't benefit? The U.S. definitely is a benefit of lower prices as far as consumers go and as far as manufacturing goes. Are you there, John?
Yep.
Because I don't hear you. Hello? Oh, you are.
Yeah, keep talking.
Manufacturing, by the way, is a third of the GDP, and this country still is a manufacturer. You know, the numbers that come out, some people do watch them, some people don't, but like the ISM, the Chicago, the Philadelphia, those Fed numbers and the other, showing manufacturing being very strong. But I guess we go back now and try to look at what's happening as far as trading can go. What about stocks? Did you look at that Continental Resources, John, in terms of that's the big shale stock for the North Dakota area, and the shale stocks as a good indicator. Have you got that symbol up there on the screen?
I'm going to pull it up after the first break. I wanted to comment on gold because you kind of mentioned that and you'd thrown some fundamental things in there. As we look at the chart on gold, this 1198 area, this is still the December contract. If you guys in the room or in the den are trading another contract now, please let me know. We might have switched to the next month out. But the December contract still got some decent volume in it here. 1151 was the bottom of the box here. We kind of blew through it. And what do we reach? A low of 1141. So, $10 below there. And we've rallied back pretty hard to that 1180 area, which was a breakout before. So you guys who are trading gold, we've had kind of a wild run here from 1200 down to 1140 in a matter of, what was that? Probably 24 to 36 hours of a trading day. We had talked about trying to get another close above 1198. And we also talked about when this thing was kind of languishing down here, not really being that interested in trading gold until we reach some inflection points, mainly this 1180 area. Well, that didn't work out for buying a dip, but being within the fair auction and having two inflection points line up like that, you just got to take a shot when you can take a shot. As we kind of got farther back down, I was somewhat interested in trading 1151. Now, 10-point gold move, as you guys are trading gold, this thing can really get away from you. I actually got stopped out of this trade. So when we get back up into the fair auction on the same bar as we've done today, let me just pull up our intraday here. This is our 240. I tell you what, I hear the music here. We're going to go to break really quick, and I'm going to come back and talk a little bit more about gold and what possibly to do with this thing at this stage.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, guys. Welcome back to the show. Eric, you still with us? Okay. If he's not, we're going to probably pick him back up a little bit later. I want to just kind of finish up with gold here. We've got a short segment. Then we're going to go to break. And I think we can cover a lot in the next couple of minutes. And then we can see if we can get Eric back on the phone because we really have got some serious things to talk about with this crude oil and the way the crude oil prices are going right now. All right, so obviously this has kind of been, and I'm going to pull up the dates here so we can see them, 11:30, 12:01. Okay? So that means Sunday, Monday. All right. And that means Sunday night late, and then Monday morning. So we got back above that 1154 area, which was the daily unfair highs, and this is what this means, just to kind of give you 1151, excuse me. This means that when we get too far back up into the fair auction, and we haven't had a close below the 1151, so that kind of eliminates the consideration that, okay, we've been to 1140. Now we're retracing back to that 1151. These are all things that we're going to cover in this webinar on December 9th at 6:30. I think is the time, 6 or 6:30. You can get into that webinar, by the way, by signing up for a free trial of the scanner that we've got on the TFNN website, and we're going to go through a lot of these setups and how the scanner kind of picks these things out for you. And I don't go into a ton of detail every day about the scanner, but it's an awesome tool with the market breadth included. We get a lot of money for that from the institutional guys for a little bit deeper version of that. I think it's one of the best things you can do is probably to listen to me go a little bit deeper into some of these setups and why the scanner kind of picks these things out for you and how to optimize, maybe spending a lot less time trying to find ripe opportunities with that thing, and also how to be on the right side of the market with the market breadth. So 1151, we didn't have a close below. So therefore, we can't look at that retracement back up on these dailies as a ripe opportunity. This is an intraday noise situation is the way you have to look at these. When we get back too far above this 1151, then we've got to start looking at, then we've got to start looking at, is this a pullback with noise and the ability to buy this thing off support? Now, it's, people are going, well, that's great. Looking in hindsight, you seem to be able to figure everything out. I'm not trying to say that we would have done this and we would have done that. I'm just giving you some basic concepts right now to think about. Closes are very, very important to me when it comes to profiles. And when you have these closes below these inflection points and these retracements back up, that, as I talked about with crude oil, the Australian dollar, and basically every other thing on the planet, those are very, very ripe opportunities when it comes to high probability setups. This was an intraday noise thing, all right? Now, if we got a close down here, then I'd be licking my lips very hard, if that's the way to say that, to get a retracement back up into 1151. Now we've got back up into 1180 again. So you've got three major inflection points on an intermediate scale to be aware of, in my opinion. 1180, 1198, let's call it 1200, and 1151. We're back to 1180. What do we do? All right. Well, again, you've got a high probability trading opportunity within a major, decently wide profile, which is saying, hey, we're going to have volatility. As soon as this thing came out, it predicted, hey, we're going to have a lot of volatility here. So what do we do now? It's not, the end of the world here to consider placing trades. By the way, considering that you've got a 240 that's also lined up at 1182, you've got that 1180 situation, you've got a DMZ around there. Now, if I pulled up the scanner, and I don't have a ton of time to go into that on this segment, but next segment we'll talk about it, you'll see these picked out for you. These 1180, 1182 DMZs. Now, what do we do here? I haven't really stated what do we do here. This might not be a bad opportunity here to put on the short hat and start thinking about stops above 1180, 1182. Now, we've had a pretty good run here. I mean, that's a $40. Is that $40? That's a $40 move in gold literally almost since Sunday night. So we'll be right back, folks.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, guys. Welcome back to the show. Eric, are you still with us?
Yes, I am. I'm here.
Great. Nice to hear from you. We were talking earlier today, your morning, mine afternoon, about some correlations, the gold, oil, currency correlations, and you were bringing up some things that were very interesting, fundamentally speaking, about some of the oil situations. Would you like to expound on that a little bit so everybody can hear some of your thoughts on that process?
I think the world has changed, John, a lot with America becoming, possibly passing Saudi in terms of reserves now with shale and all. And everyone's talking about what price oil is going to really affect the shale. People have said $60 a barrel is the black swan we've been waiting for. But I'm not sure that's the case. But with regard to Saudi Arabia and oil, and now we might surpass them, that's a major fact. We're going up past 9 million barrels a day. And so that will surpass them here. And I think if you look back over the history, we tend to not think about Saudi Arabia that much anymore. We kind of always on Iran, Tehran, what's going on with of course, Russia and the Saudis. We expect them to be okay. Well, it hasn't been okay. They have affected us more than any other country in the world. In the 60s, you had the Six-Day War. In the 70s, you had, of course, they increased the price of oil. I remember in 73, they jumped that price of oil, and all the columnists got on the paper A guy named Charles Lear used to write Herd in the Street in the Wall Street Journal and said, this is going to affect your toys because oil is in it. He explained how oil is in everything. And, of course, then we had the gas lines that they made us go through. So the price of oil and the Saudis had been really an interesting weapon. We went through the gas lines, and we went through the recession. And then what did we have after the price of oil went up? We had the inflamed inflation that took us almost a decade to clarify and clear up with Volcker. So the Saudis affected that. And then, of course, they also, while in the meantime, knew where they wanted to put their money. In the 70s, the late 70s, they were buying gold like crazy when gold hit its high. So the correlation was clear, oil and gold prices up on both. The dollar wasn't really a factor then the way it is now. Now our strong dollar is knocking oil down and gold down. But net, it's kind of a complication situation. I love the way they came in, in terms of the euro. The Saudis were very big on the euro after 2001. And they jumped on top and bought that euro and brought that up from 100 to 130. They were the ones who did that. They were the ones who rose the gold. I think they're playing the gold play right now. London this morning, you had a lot of short covering. But gold and oil relationship, and then, of course, currencies has been there. And it sounds complicated and like you're all over the map, and I'm all over the map, and I think my mind is a little bit all over the map, and I get it, into the correlations, John. But you're able to sit down and look at that scanner and pick out spots with that correlation, the Australian dollar, or be it the ruble, or be it, that's affected by oil, or be it, if you want to look at some stocks in oil, or you want to look at gold. It's terrific that you're able to really get focused. And traders can focus in minutes by looking at the scanner. It's it's a terrific tool that you got there, and I don't know how. What are your thoughts on this correlation? Do you think we're getting back into a lot of trading opportunities, gold, oil, and currencies? You have been making a lot of money for people with the yen and the Australian dollar.
I've got the yen. I've got the yen up right now, and let me speak just a tad about what you're talking about. We've had, I'm not going to call it luck, but it's been almost unavoidable, in my opinion, some of the things that have been going on. And, when you have these central governments behind these products that are going a certain way, you don't need to outthink those type of situations. And, the Japanese yen, you mentioned that. We had a, decent little technical trade that happened, around Thanksgiving. I hope nobody was sitting around trading on Thanksgiving or trying to trade off markets or exchanges that might have been open. But, we had that kind of come back into unfair highs and move higher. Now we shot for 119. Now we're coming back again. And we made new highs with that move up to 119. These are long-term historic moves, and there's not a lot of good news out there to try to overthink these things as if you are going to pick the tops on some of these products like Eric was speaking of with the oil. That thing can go a lot lower. The ruble can go a lot higher. And we just happen, and the bonds and the notes, I'll pull those up really quick. These were all Genesis type situations that actually were born from the scanner, and then we're able to kind of eliminate one side of the marketplace with the way that scanner kind of puts the information in pretty black and white pictures for you. Here's the notes. This has been, again, we kind of cover somewhat of the same things on a day-to-day basis. We try to look at some stocks every once in a while, but, people have really – big traders that I know, I talked about people that have retired lately because – you don't want to give back money when you make it in exponential buckets fashions like people have been making it this year following some of these trades. So we've been focused, Eric, as you know, on some of the things that you make your entire year or decade on sometimes as a trader with these moves that don't come around like this very often. Sure. And, when we kind of look at these things, we've looked at the 10-year. This has just been stupid easy lately to try to, peg this. and you get help all the time when it comes to trading this thing. And the market's getting a little skittish. The stock market is, and when I say skittish, what are we, 20 points off all-time highs on the S&Ps? But these notes pay attention to that, fundamentally speaking, and technically speaking, you get that kind of double confirmation on your side of the fence by some of these fundamental things out there with the yen, the Australian dollar, the 10-year, the crude oils of the world. Gold has been, I'll admit, has been relatively difficult to try to get your arms around because you've got so many dynamic factors happening within that environment. But, these things are something that I've focused on as a trader. And a lot of the institutional guys that we talk to aren't necessarily trying to pick stocks right now because there's so much money and points, if you will, in these environments that we've been going over on a day-to-day basis because, normally, things kind of jerk around and, I've traded a lot of commodities in my lifetime, and sometimes you go into dead areas for some of those products that, you might as well just go fishing, just do not come to work and trade cotton for the next 2 years. Sometimes that happens with those products, but these have been so explosive and so powerful, that it's been something we've been focused on. So, Eric, I didn't actually kind of let you finish a while ago. If you would like to continue on some of the topics that we talked about earlier, I'd really appreciate it because I think some of the listeners would thoroughly enjoy that.
All right. I think what we've seen, like I said, with the Saudis, they've had a tremendous effect on the economy of this country, and they will still continue to do so, even though we are getting, up there in our own independence. But oil has caused wars, has caused famines. Oil has been the key. Gold, of course, comes in as, listen, let's face it, gold, interestingly enough, from the fairy tales and the myths, the Irish pot of gold and all of that. Gold is still something that we have to really keep it, like you do. You keep a real focus on because it has an effect on so many other areas of the market. And when you combine it with oil and then you throw in some currencies, you've got a good overview. Now, the big guys in the institutions are trying to figure this all out as to allocations. And I think the allocations are going to be that they'll expect gold to continue dropping, even though they're not in there trading or trying to buy a dead cat bounce off it. It's going to be a major change as to what's going to happen. Let's take a look at the shale industry. That is interesting, and that financing is getting a lot harder for those companies out there in the Dakotas and then Alberta and all that. Wall Street's made a fortune, John, on the junk bonds, financing shale. They've got a tremendous amount out there of junk bonds, but they keep having confusion, in my opinion, as to what is their break-even price on the barrel of oil that keeps them profitable. Obviously, we thought 80 was great. I think oil was too high for too long during the summer, for example, when demand we saw was weakening tremendously in Europe, and deflation and disinflation almost. So oil is coming into play now with where it probably should be. Eventually the market will flatten out. I don't believe we're going to stay below 60. There are some crazy things out there that scare me that says 40 could happen because of this or that. So you're going to get a lot of press. But keep in mind, from a big position institution, and traders have to keep that in mind, the way they think is GDP next year is up 2.9%. These are Chinese numbers. John, anyone can do Chinese algebra. I trust their numbers. I think they're pretty good on their numbers over there in terms of their ability to do the algorithms and all the metrics involved in cracking the numbers. And they come up with about a 2.9, which is better than this year for next year. And in manufacturing is strong. The dollar is strong. Oil does help the consumer. Even though Christmas numbers don't look so great right now, they don't mean anything anymore because, it used to be a day after Thanksgiving would indicate what Christmas is going to be like. Nonsense. I mean, now with the internet and the buying on the internet, more and more and more, it's going to be different. Some points I wanted to make, John, in the gold thing, getting back to that, and we keep going back and forth between oil and gold, but there's a reason, there's a relationship. They're both heading down, and they both have, and the dollar was heading up. But do you know that now in Europe, that, in other words, they're using money as collateral, not gold? They used to, and they're going out and borrowing money at these low rates to buy gold. And, there's certain countries repatriating gold. They're bringing it back home because it helps confidence. Gold and confidence go hand in hand. When the country says, let's bring back the gold from the New York Fed, like Denmark did, or the Swiss are doing, and the French are doing, the Dutch did. The Dutch did it to the tune of a couple of hundred tons, for Christ's sake. What we're seeing in gold is countries using it to sort of the stuff they're looking to increase the confidence of the people in the countries. European people are not very confident right now. Italy and Spain, a few of those other places, they look out at the future. They live day to day. But it's disinflation, still job problems, and not a lot of growth, not a lot of consumer interest. So, we're in pretty good shape relatively in terms of American trading.
Well,
I don't know really. Go ahead,
all the stuff you're saying is very interesting, and it seems that these, these conversations, if you will, that happen on the news wires, they kind of come in waves where there's, and that's just the way trading goes. I mean, people kind of get a little up, a couple of weeks ago, everything's fine, and then today there's just a kind of a plethora of articles that aren't that cohesive to move the markets north, and then therefore the stock market, kind of suffers a little bit. And who knows if that's some kind of, like you talked about a couple of weeks ago, when there's a lot of games being played on Wall Street, and somebody sends an article type information out there to some of these news wires, or writes an article for the news wire, that's going to sometimes move the market. What's happened today is, we've got I've got the S&Ps up right now, and what really is cool is that we're going to have the markets obviously open in just a little while, but you see a red bar here on our S&Ps if you're looking at in the den, or looking at it on the TFNN network. We got about 30 seconds here. I'm going to try to be as quick as I can, but I want to get back into this after the first break, so please hang around. So what happened on the scanner is, we got an indication. Here's the yellow cell on the S&P saying we're going to probably have a new box up here. We don't know yet what that is because the market hasn't opened, and that's the way that's going to work. But we're obviously having some breakage of profiles on the lower time frames. That's not the whole story here. But what you'll see here, and I'll talk a little bit more about this after the break, and how our breadth actually folds into this too. So, Eric, thank you very much for joining us, and we will pick it back up in a couple of minutes here, folks.
Thank you, John.
You're welcome.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped, and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Steve Rhodes as he teaches techniques on technical analysis using pattern recognition, celestial charting, Fibonacci, and other tools. The Trader's Edge, next on TFNN.
Hi guys, welcome back to the show. We were talking about the S&Ps and we were talking about the scanner and some fair warnings here that were given off by our daily sell here. I'm going to get into that. But while I'm in here, I want to also talk about this breadth situation. And what we're going to have is we're going to have a lot of stocks starting to open. These numbers are going to change a little bit here. But I will pretty much guarantee you that the long-term situation probably won't change that much, even if you have a lot of stocks start opening a little down, which they probably should, being high beta situations with this S&P 500 index. So that's still the tone on the long term, that we should still be buying dips on long-term inflection points. Now, this may change. It may change intraday, so we have to keep an eye on that. That's what these speedometers are for. Again, I expect the 60-minute, possibly the 240 to start possibly switching negative. But the long-term and the back testing that we've done says to me that if you're trading this index, as you know, as well as the Shanghai or the NASDAQ or whatever, you got to pay attention. These are great guidance systems for the short term, these 240s and 60s. But until we see some cracks in the armor on the long term, in this type of situation, you're still supposed to be buying dips into inflection points, which are plainly stated within the scanner. All right, and I mean these inflection points, the 2014 50, the 2014 65, as you can see the bottom there, 2014 65. Let me tell you why that's the case. And we see 2038.90 as the top. This is our daily inflection point situation here, weekly and daily we just talked about. But what's happening right now is we have a Vega indicator that's saying that a new box is going to appear today, and that yellow cell tells us that. And that scanner will tell you the new inflection points, and this is saying as of right now that we'll be opening below the current profile that'll be outputted right now. Now, what does that all mean? That means that we've got the current price sitting right now below a profile that's probably going to get emitted here on the opening. It may take a little while today for that to happen, but it might happen on the opening, and you get a new set of inflection points, and the scanner will let you know what those inflection points are to hopefully leverage off of in the interim. Now, we look at a lot of other things. This is our daily situation exclusively today, and we're going to be. It's hard to go over all these concepts in a short amount of time, but we're going to be looking in the webinar at about 5 or 6 different things to make trading decisions, and you can grab a lot of those things from the scanner in general. But we're also going to kind of go directly into the charts, and we're going to look at situations like these magenta bars overextended. We're going to look at breadth. We're going to look at new boxes forming. We're going to look at I ratio a little bit, one of our other indicators. And we're also going to look at trading opportunities. Now, right now, if I use the scanner and I say, hey, I want to see daily new box attempting to appear, and this is on my normal suspects, not the S&P 500. We're going to have new candidates pop up that are having new boxes attempting to appear, which is usually a bearish or bullish sign based on what the current action or most recent action has been. Stay tuned for Steve Rhodes. We're going to be back again tomorrow, guys.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.